could uh, use and do, and things that get overlooked that seem really simple. Things like chains, fire extinguishers, eye scrapers, coffee pots, road atlas. Um, how many still have a road atlas in your truck? I would tell you to raise your hand like we do at Truck to Success seminar, but I wouldn't see it. Post over on Facebook and let us know that, hey, you've got a road atlas. How many times does your GPS actually fail you? Now, if you've been driving the same roads, you probably know where you're going, and you're just kind of following the road, and that's where you're going to go. Pens, paper, you know, hey, trucker tax, tools, bookkeeping service is deductible expense for you. Uniforms, gloves, logbooks, maps, cell phones, ELDs, your CB radio that you put into your truck, APU that you're putting into your truck, tools, Windex, paper towels, showers, you name it. These are ordinary and necessary business expenses for you to run your truck. Now we get into the next question is, hey, I did some repairs or maintenance on my truck. Why is this not 100% deductible today? Well, IRS has different rules. So repairs or maintenance, depending on the type of repair or maintenance it is, will depend on whether it is a capitalized expense or it's just an expense. So if you're going to capitalize it, means you're going to put it on the balance sheet, depreciate it over a period of time, and then expense just goes right over and is expense. Now, if you're making money, generally it's going to be capitalized and then it's going to be fully depreciated using the depreciation rules. So you're still going to get the same write-off, but it's just got to be done differently. And that's where your tax person comes in. And that's where they should know, hey, what is the difference between, what is going to be capitalized versus what can we expense today? Maintenance. Generally, if a maintenance repair makes the equipment better, restores the equipment back to its normal condition, or modifies the property for a new or different use, then the expense is capitalized. So, then you've got to depreciate it. If you have maintenance expenses that don't fall under those categories, then it's going to be deducted in full in the same year the expense was paid. Okay, so some expenses that can be considered expensed in the current year: parts, labor, oil, tires, simple repairs. Simple rule of thumb: when it comes to maintenance, if you repair it, you can deduct it. Now, I would use the other side is if you're actually restoring it, then it is then capitalized. So if you're just repairing simple repairs, then you're just going to expense it. If you're actually restoring it, the good way of doing it is to say then it would be capitalized expense. So repairs versus improvements. We talk about this at Truck to Success. OOIDA puts a seminar on usually every year in the fall. Hopefully we're going to be doing it again this fall. And I go there and speak at the Truck to Success seminar. And, we talk about everything from, or how you're going to organize your business to lease versus purchase of a truck or even trailer or just equipment in general, bookkeeping, and of course, repairs versus improvements. So, you as a taxpayer, you're required to capitalize the cost of improving tangible property, regardless of the size or the cost incurred. So we have to look at what is improvement, betterment of the unit, restore the unit, adapt the unit to new or different uses. So, we try to explain that, hey, this is what the IRS is looking at. This isn't our rules. This is your wonderful Internal Revenue Service that has these rules that are put in place, how they're going to look at your equipment for repairs versus improvements. Now, we have ways around certain things and different items we can use to actually expense some things. So they do give us a de minimis safe harbor. Since sometimes it's hard to determine whether to deduct or capitalize a repair, the IRS allows safe harbor repairs. So for most truckers, you may use a safe harbor to deduct amounts up to right around $2,500 per item or invoice. So, if you're doing some major repairs that are running you $2,500, then, you can then take and use the de minimis safe harbor on that and write that expense off right there at that time. So it's a nice and easy way of doing this, and kind of to go through and, explain this. We have some examples of what is how you would be able to go through and do this. So Jane goes in and replaces a part that costs $2,000. The part is expected to last 10 years. The cost is deductible because it doesn't exceed that $2,500 diminished safe harbor threshold. So that's where that diminished safe harbor threshold comes in. So you want to use that where you can. But Joe, on the other hand, went to a more expensive shop and he replaced his transmission for $3,000. Okay, come on, transmission is going to be more like $15,000. But this is deductible as a repair because he just repaired it. Now, if he replaced it for the $15,000, then it's going to be a capitalized expense. So it's just a repair. So now, again, if you replace that transmission, then that's going to be capitalized. So you go in and you repair your engine and you do some simple repairs. Okay, it may not be simple, but you do some minor repairs to it. It's going to be deductible. Now, if you do a complete engine overhaul, which becomes much more expensive, then you're going to want to capitalize that and depreciate that over the useful life of the truck. Now, that may be a 3-year or 5-year depreciation model, but then you can take bonus depreciation or you can take Section 179 depreciation. So you still be able to get that full write-off for that part of the equipment as you're going through and doing this. So, there's a lot of different fun things that you can do that can help you in business, but you've got to make sure you're doing it right. So we're going to continue talking about things for truckers and what you can deduct, what you cannot deduct, things you need to look at as you're going through. And one of the big items we're going to talk about in the next segment is factoring. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, I hope you guys are all having a great week out there. We were out working on the ranch here this weekend, and gosh, it was getting really hot out. But, we're getting things done. We're moving right along. We're setting up some new offices out there so we continue to improve facilities for taxation solutions and trucker tax tools. So we're getting things done and having fun. We got a busy week this week. We'll be on Ask the Experts tomorrow morning at 10 a.m. Eastern time, again, right here on W4CY radio. So look for us tomorrow morning as well. Today we're talking trucking and expenses, and the first segment we talked about repairs versus maintenance, what's capitalized, what you can expense. We're talking about one of these evil things that I don't really like, and I am not a huge fan of this item. And I see businesses doing it. There is sometimes a need for it. Sometimes you've got to go this way. Sometimes it makes life a little bit easier, but it does cost money, and it does get expensive. I've seen these guys make a lot of money in this kind of business. And no, it's not lending, because my gosh, when you go to one of these lenders on these trucks, sometimes they gouge you with high interest rates, which is criminal as I see it going out. But this is another way that you as a business owner are losing money, but sometimes it's a necessary evil, and that is factoring. So factoring is a financial service where business sells your accounts receivable or unpaid invoices to a third party at a discount to get immediate cash. Okay, so you're sitting there, you got your own authority and you're invoicing, and then you don't want to do the collections on it. You don't have people that necessarily pay you timely. You're not sure how you're going to get paid, and you've got to meet your bills, so you resort to factoring, where they take 1%, 2%, 3% of what you have, and then also sometimes they'll recover back from you things they cannot collect. So that sometimes is a major cost in your business, paying that out. So the primary cost of factoring is the factoring fee or the discount rate, which is a percentage of the invoice's face value that the factor is going to charge you for their services. Now, I've seen these rates run from anywhere from 0.5% to 5% per invoice. And then, hey, I've seen rates go as high as 10%, depending on factors of invoice volume, customer credit worthiness, and the type of industry you're in. Now, a lot of factoring in trucking, I've seen it stay in that 1% to 3% range, depending on the factor that you go to. So you just got to be aware of the cost of factoring. Now, the cost of factoring is a deductible expense, so you do get to write that off on your taxes. What's not deductible is any of the reserves that the factor may hold. So, the factor requires you sometimes to leave reserves there, so they're going to pay you, let's say 97%, but they actually pay you 90%, and then they keep the other 7% there in reserve and build the reserves so that if they have a chargeback, they can pull it out of the reserves. Now, when they pull it out of the reserves, it becomes an expense for you. So you need to record the gross amount as income and record the factoring fees as expenses. So if you have a $10,000 invoice, the $10,000 is gross revenue. And if they kept, 3% of that, the 3% is the $300, and that is the expense on that. Now, if they hold a reserve, you would also put on the balance sheet that you have a reserve amount of, let's say, $700. And so they would have that reserve over there. And then you would track your reserve. And as they come out and pay the reserves, it comes out of the reserve account. It's not income when they pay it out to you as reserves. Now, if they pull money out from the reserves, it's an expense. So that would lower your gross income down and take that. So that reserve account is an escrow account on the balance sheet, does not hit your profit and loss. Now, there are some in this industry that do bookkeeping, and they do it more on a cash flow basis and a cash basis, and they don't do a balance sheet for you. I'd steer away from those people and, make sure I'm going to get a balance sheet and a profit and loss every month for the bookkeeping that you get. That way you can see what you have sitting in your reserve account. Everybody knows cash flow. It's cash in, cash out. Hey, I got $10 left at the end of the month. That's my net. Okay, well, that's not the way accounting is supposed to work or bookkeeping is supposed to work. You should have a true profit and loss and balance sheet, taking the proper expenses. So you have other costs in factoring. So don't miss these costs. You have maybe application fee. Maybe you've got to pay a fee to become a client of that factor. They may be doing a credit check and they charge you a fee for that. That's deductible as well. If they're doing wire transfers to you and they hit you with a wire transfer fee, every time they transfer money, then, you've got to take that as an expense as well. Hopefully they're doing it via ACH and not charging you fees to transfer money. But if they are doing wire fees, remember, that's just another cost you're paying out of your pocket. Yes, it's deductible, but it also comes out of the money that you're getting when you factor those invoices. And then if you terminate and they charge you termination fees, that's deductible. So the first thing I tell you, whether you're factoring, you're signing a lease, you're buying a new truck, whatever it may be, read your documents. Understand them. If you're not really sure, ask questions. Have them write it out for you. Okay, what is this going to cost me? Okay, there's an application fee. I understand that. How much is it? Great. You're going to do a credit check and you're going to charge me for it so that I can use your service. Negotiate with them. Maybe they won't charge it to you. Wire transfer fees. Can't we do this via ACH so that I can get my money transferred to me without having to pay a wire transfer fee? Saving money is sometimes the name of the game. Yeah, those may be a write-off for you, may be deductible for you, but it doesn't mean it has to be a cost for you. Because, if they charge you $15 every week for wire transfer, that adds up very quickly. There's no reason to have that fee every single time that you're getting money from your invoices. So, make sure it's somebody that can do ACH to you. Maybe they're putting it to your Comdata card and then you can transfer it to yourself and there's no fees involved in that. So be much cheaper than having them do a wire transfer. I've seen banks, hit you with a wire transfer fee for incoming. Now, just imagine this. Every week you're getting money wire transferred to you. Your factor's charging you, we'll just do this easy, $10 a week. And then your bank, every time the wire transfer comes in, I saw mine hit me for $15 when I got a wire transfer. Well, let's just say $10. Well, you got 52 weeks, that's $520 for paying the factor. And then you're also paying it to your bank. And if they're only charging you $10, it's $520. So now you're $1,040. Yeah, but I get to deduct it. If you're in a 20% tax bracket, it's only saving you $200 on your taxes, but you're still out, that full $1,000. Okay, you save $200. Hey, we're down to $820. You're still out of pocket that. You're not getting that back from the IRS. You're not getting that back from your reduction in your taxes. So, watch those fees. We don't want to be hit with fees where you don't need to be hit. And that's one of the areas that you can actually save yourself when you are looking at costs and your bottom line. Hey, when we come back, we're going to talk about communications and what is deductible for communications as a owner, operator, over-the-road trucker. We'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Man, I enjoy talking about trucking. If you're a trucker, over-the-road trucker, owner, operator, give us a call at Trucker Tax Tools. Let us talk about your bookkeeping and your taxes. This is what we do. We specialize in 95% of our business is around you, that owner or operator, over-the-road trucker. So you can go to truckertaxtools.com or just give us a call at 877-996-6477 and let us talk about how we can help you with your bookkeeping, with your taxes, how to keep you up to date, and what the benefit is of having like a profit and loss and balance sheet. Matter of fact, what we'll do is in the next segment, we'll kind of talk about that. What is the benefit of having bookkeeping and profit and loss and balance sheets? So, hey, get with us. When you do call us, mention Tax Talk for You. We get you special discounts as well. So you as a trucker, hey, you need to save money everywhere you can and find all the savings. And we're going to talk about, communications and what's deductible and what's not. But I had Jose ask here, what about personal expenses and personal supplies? What can we deduct? So I want to give you an answer here, and I appreciate the questions that are coming in. Not all personal supplies are considered tax deductible. And again, in order for personal supplies to be considered tax deductible, they have to be ordinary and necessary for your business. Whether you're over-the-road trucker, owner operator, or a small business person, the rules are going to be applying the same way. So when you are operating your business, you're looking at what is ordinary and what is necessary. And in the trucking business, some of these can be things like uniforms. Now, not every piece of clothing is considered a uniform. Uniforms more or less have logos on them. So if you're buying a shirt that doesn't have a logo or anything on it, um, hey, it's probably not deductible. But if you do have an emergency vest, that would be deductible. If you could wear those clothes anywhere else, uh, church or shopping or whatever, they would not necessarily be considered deductible business expenses. But again, if it's got your logo and stuff on it, or there certain things are required for where you work, then you would be considered a uniform and would be deductible. And no, you being an owner operator can't just say, hey, everything you buy is required for work. You have certain things you have to wear because you're hazmat, or maybe you've got to have steel-toed boots. Those are deductible. Your gloves, shower expenses, the coffee, even the coffee maker, things like that are required possibly for your truck. You use it within your truck, and therefore we're going to be able to deduct it. So it is a very, very broad tax deduction that you can use, but you really got to think about it. Keeping in mind the IRS's words, ordinary and necessary. And then it's going to make it easier for you to decide whether or not the item is considered to be tax deductible. And if you're not sure, ask your tax preparer. Hopefully he knows ins and outs of the trucking business like we do. We're always looking at everything that we have that you can use within business. Now, we're coming into the section I want to talk about communication. So you got to keep in mind that these methods of communication need to be used strictly for business. If you use an item for both business and personal, like a cell phone, you may have to identify how much you use that cell phone for business and how much you use it for personal. Now, some people are going to use your cell phone exclusively for business. Now, they may have two lines for business, one for business, one for personal. They're carrying two phones. Don't see it all the time, but I do see some people that do that. And one of the reasons they do that is they do get inundated with calls from their business. So therefore they want to be able to shut down and ignore business, maybe evening hours or morning hours or some particular time during the day. And then they have their personal for family use. So I have seen that. So, when we're looking at truck driver tax deductions, we're talking about communications, any technology needed for communication in order to run your business can be considered a deductible expense. Now, you as a truck driver, there are many methods of communication that you'll be able to deduct. And, we're talking about tax deductions. So if you're going to use these anyway, these are things that you want to be able to find the way to deduct. Your CB radio. So the cost of putting in the CB radio, the cost of that equipment, antennas, whatever it takes to put in the CB radio, that is a deductible business expense. Internet. So if you're using internet, you can be using that for communications. Email, text messaging, message boards, load boards, things like that. You're using those things to communicate. Your radio in your truck. Yes, it's considered a communication device, even though you're not communicating out, you're receiving it. You replace your radio in your truck, or you put satellite radio in your truck. those are considered to be deductible expenses. Phone cards. So maybe you're not traveling with a cell phone. Maybe you just pick up a phone card and then you call places. Don't see that much anymore. Matter of fact, I think it's harder to find a phone on the road. I know years ago, I've seen that the phones that pay phones around have completely disappeared over a period of time. We did find a place in Hawaii near the volcano that actually had Superman's phone booth. And we were talking with the kids, and I kind of started laughing because I saw the phone booth sitting there. And I went, oh my God, where is Superman? Because he's probably going into that phone booth and changing into his cape and going. And they looked at me like, what? Okay, I'm old. I remember those shows. I don't think they've seen that version of Superman. Now I think he just tears off his clothes and right into his cape and going. Doesn't need a phone booth anymore because he can't find one. But I know where it is. It's right there by the volcano in Hawaii. So if you're ever out in Hawaii, go find the phone booth and see if Superman's somewhere around there. Little funny stories that we're going through and looking at, and you think about it in life and you go, yeah, when I was growing up, there was a phone on every single corner. Well, now there's a phone in every single hand. And I don't care whether you're sitting at a restaurant, you're sitting at a fuel pump, you're in a travel stop, you name it, people walking down the street are sitting there with this hand up here and, like this. Man, you put the phones down sometimes. Sometimes it was nice. You had to find a quarter or something, a dime to make a phone call and call your parents because you're running late. Now, hey, what do we have? We have things like Life 360, or do we have tracking on our phones so you can know where your kids are, your spouse or family or whatever it is, know where they're at day in and day out. Tracking around here sometimes is incredible and stupid, but that's part of communication devices that you have out there. So things you got to look at, make them tax deductible. Hey, we're going to take a quick break. When we come back, we're going to talk about what is the benefit of absolutely great bookkeeping like we do. And what is the benefit of a balance sheet and a profit and loss for you and your business, and understanding how knowing how your business is doing can help you improve your business. And we're going to do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We talk all the time at Truck to Success with OIDA's trucker program that basically it's taking new truckers, people that are maybe W-2 drivers, want to become owner-operators, want to run their own business. Some of them want to be leased on. Some of them decide they're going to get their own authority. But we talk about all these wonderful things at Truck to Success. And when I'm there, I also talk about financial statements. The benefits of having financial statements for your business and getting a complete set of financial statements, not just a cash flow statement, but a complete set of financial statements that includes the statement of financial position, balance sheet, the statement of profit and loss, the statement of cash flows, and sometimes notes to the financial statements. So these are things that you're wanting to actually look at and understand and see. So your statement of financial position, balance sheet, is the easiest way of putting it. When we put everything together, the first thing it starts with, of course, the cover page, maybe a cover letter explaining that, we put this together based on the information you gave us and things we've requested from you. The third page is going to be the balance sheet, and it's going to show what you own, your assets, your liabilities, and equity at a specific point in time. So, right now we may be finishing up March's financial statements. And so you're going to see March's balance sheet. And so that gives you the statement as of that period of time. Now, when you're talking about assets, it's going to show the full value of the assets. It's going to show the depreciation taken, and it's going to give you your net assets that are out there, fixed assets, and then add in, other assets that you may have out there. So it's, a nice detailed information for you, listing again all your assets, cash, your trucks, your trailers, depreciation, of course, and then your liabilities, your loans, accounts payable, and then your equity section, which is your stake in the business. So, some of the key trucking specific accounts are going to include things like trucks and equipment, trailers, all long-term assets. Then your liabilities and, things that you may have like fuel surcharges or driver payables, maybe taxes due. And then, we analyze the components that helps assess your financial health, debt levels, and the overall value of a business. Now, this works the same way in any business that's out there. Now, if you've got negative equity, it means you've been taking way too much money out of your business. So we're looking at that as you go, and you're taking distributions and everything. So if you're having to borrow more money to stay in business, and then you're taking distributions then become taxable to you. So you kind of got to watch your equity in your business as well. So to understand your balance sheet a little bit more, your assets are resources owned by the company, not you, the company, because you own the company, but these are owned by the company. Current assets are short-term assets like cash, checking accounts, accounts receivable, which is money owed to you. So if you're invoicing, you may have accounts receivable. Long-term assets or permanent or fixed assets, such as your trucks, trailers, and buildings. And then accumulated depreciation, which is a contra asset account showing the total depreciation of fixed assets over time, reducing their book value. So kind of give you the short rundown of, what's on a balance sheet. Now your liabilities are two different types of liabilities, and your liabilities are obligations that your company owes. Now you may be a personal guarantee and you owe the money too, but these are liabilities the company owns. Your current liabilities may be like your credit card, accounts payable, driver reimbursements due within a year. And then your long-term debts are debts due in more than 1 year, such as long-term for trucks or other equipment. Or you may get some kind of capital loan and stuff out there. Maybe some driver payables. Those are short-term, so wages or benefits owed to drivers but not yet paid. You may have payroll taxes due if you're doing payroll. Those are all going to be short-term items that you're going to have out there. So your balance sheet is going to give you a snapshot of your company's assets, liabilities, and equity, give you an idea of your financial health. It gives you some operational clarity in helping to manage assets, like your fleet, understanding obligations. It gives you the ability to help make some strategic decision making. based on debt to equity, equipment acquisition, overall business growth, and essential for accurate tax reporting and audits. So it becomes extremely important to have that balance sheet out there as well. Now, what everybody gets concerned with is your profit and loss, your income statement. It's a vital tool for understanding your trucking company's financial health as well. This report gives you a snapshot of the profitability over a specific period of time, and it can help you make informed decisions about your operations. Now, key components of your profit and loss is one, your revenue or your income. This section lists all your income generated by the trucking business. So, we break it down into much more detail because we will do gross trucking income, so revenue from delivering goods. And then we break down other income such as, bonuses or reimbursements, fuel surcharge, things like that you would get back and would be included in your revenue. And so we're listing all those items out so you can see, hey, what am I making up here? What's my gross revenue that, we have? And then the second section that we do is cost of services. And that cost of service that we have will break down things like fuel costs, scales, tolls, lumper, all those items out there that's the cost of you doing business and delivering your freight. That's out there. And then the third section is expenses. And these get broken down and, become very much in detail out there. And, your truck lease payment, your insurance premiums, your license and registration, staff salaries or wages that are out there. So you're going to have all those expenses there as part of doing business. Now, you're going to want to look at some of these expenses and determine, which ones are fixed, which ones are variable, what's it going to cost you every month, whether your truck is sitting still. Now, we use a cash flow statement a little bit for doing that because we can see the cash going in and out and see where the cash is going. Income statement is going to actually give you your picture of your overall financial performance of the business over a period such as a month or a year. It reveals whether the company is making or losing money by comparing total revenue to total expenses. And by tracking these expenses, you, the owner, can identify high cost areas, make adjustments where you can, and finding more fuel efficient routes maybe, or reducing maintenance costs where you can, or reducing those variable costs that maybe you're just running through the business that don't need to be there in the business or shouldn't be part of the business. But if it's ordinary and necessary, how do you reduce those ordinary and necessary expenses to be in the business? So, as we're going through these things and we're looking at, the financial health of your business, and we start looking at the cash flow, the primary purpose is to provide that snapshot again, and it's your ability to generate cash. So use these things, put them into a nice little spreadsheet that you can get over on OOIDA's foundation website, where it will tell you your cost per mile. You can use our balance sheets and profit and losses to go right into those things to work on your cost per mile, which is what you really want to know when you're in the trucking business. What's it costing me every mile I go? Man, we've been running and gunning here, driving down the road at 80 miles an hour, 90 miles an hour, maybe 100 miles an hour, talking about bookkeeping, taxes, repairs, maintenance, factoring, ordinary necessary expenses, communication, all that, and we always run out of time. If I talk faster, man, we still run out of time. So what we tell you is, man, we appreciate you being here. If you're in the trucking business, you're looking for somebody that does great bookkeeping and taxes for you, the owner or operator. Hey, give us a call at Trucker Tax Tools. 877-996-6477. Again, 877-996-6477. Let us help you with your bookkeeping, with your taxes as a trucker. We know trucking inside and out. Mention you heard it here on Tax Talk for you, and we'll give you special discounts. Now, what I tell everybody to do is go to taxtalk4u.com. Follow us over there. Follow us over on Facebook so you never miss an episode. And if you do, then catch our podcast over on iHeart, Spotify. We're there. We're trying to help you as a business owner in your truck to run more efficiently, more effectively. Now, make sure you're here at Tax Talk for You, 10 a.m. Eastern Time every Monday. We're going to be here. You should be here. We're going to have a great day. Have a great week. Have a God-blessed and glorious week. Enjoy what you do. Take the time with family when you can, because family is the ultimate in life. And again, we'll see you right here Mondays at 10 a.m. Eastern Time at W4CY Radio, taxtalk4u.com. Again, it's Tax Talk, the number 4, letter U.com. And we will see you next week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalk4u.com. See you next week at W4CY.com.